I am Jenny Price from Backroads Properties here at Keller Williams Realty Services, and I am here with Rob Trump. He's a mortgage professional with about a decade's worth of professional expertise, and we're going to talk about lending through the USDA, right?
USDA.
Now, this is USDA-backed loans that we're going to talk about and not USDA direct loans. So those are two different kinds of loans.
Fannie Freddie's not going to support agricultural financing.
Right. And so that's going to be a big difference because the USDA-backed loans, those are going to be for single-family residents. Those are not going to be for agricultural loans, things that you want to farm. So that's the biggest divide between the two. Like, do I need to go USDA direct? Do I need to go USDA backed? And then there's some nuances to the USDA backed. And you're going to tell us about this.
Yeah, so USDA backed loans are going to be, for a primary residence, typically with a home that would be in a designated rural area. So when you think of rural, you do think of like farm and country land and, being way outside the city limit type living, but that's really not the case with USDA. There's lots of areas, there's a USDA map that you can plug an address in to find out if it's USDA eligible or not. A lot of neighborhoods, subdivisions that fall into and under the category of USDA.
What is the advantage of getting a USDA-backed loan?
The biggest advantage is a no money down payment.
That's a pretty huge advantage.
You don't have to put any money down, right? So there's no down payment requirement. So if you're going like FHA, you're looking at 3.5% down. If you're going conventional, sometimes as low as 3% down. So USDA is not going to have any kind of down payment requirement.
There's no down payment requirement, but they are going to have to bring money to the closing table.
Potentially. I mean, closing costs are not part of the whole transit. You've got your down payment and you've got your closing costs. So USDA says, hey, you don't have to have a down payment. More than likely, you will have closing costs for your loan, no matter if it's conventional, USDA, FHA, VA. You're going to have closing costs.
Now, can those closing costs get wrapped into the financing, or is it something that they actually have to bring a check to closing?
Closing costs typically are costs that the borrower entails to get the loan, closed. There's an umbrella there, right? It's the cost for the loan is one column. You've got your underwriting, you've got your credit reports, you've got your title searches and fees. That's one half of the closing cost umbrella. The other half would be your escrows. So you've got taxes and insurance and to set up to make those payments. Technically that's your money being set aside to pay bills on your behalf. So if you think of escrows as like your savings account, you're taking money from your bank and you're putting it into your savings account to pay taxes when they're due. So that would be kind of the two areas of it. Can you roll them in? You can. Most lenders will, increase the rate a little bit to help cover the costs because it would basically, it can be done, but it would be more advantageous probably to have some sellers pay some closing costs on your behalf. So in the event that you wanted to buy a home, have closing costs instead of, house is worth $200,000, but I'm going to come in at, 185. Well, maybe we come in at, 195 and ask them to pay some closing costs, or closer to their asking price and ask them to pay some closing costs. So both people kind of get what they want. We get our asking price, we get our net, and then, there's money, not due at the table.
That's something that either myself, who's representing you in the purchase, can help negotiate that, or whichever agent that you're using. But definitely rely on your agent to help negotiate that and to work in tandem with the lender. Yeah. What is reasonable to think hey, I'm going to need about this much to and I know it's not going to be exact because there's a lot of variables and nuances, but just to give people a ballpark idea of what they're going to need to be able to get, how much do they need to save? Yeah,
so 1.5% to 3% of your purchase price is probably what you can expect
for closing costs.
Right? So, shop around, talk to different lenders, talk about their closing costs. There's going to be some things other lenders do better than others. Closing on time is a big deal, So if you can't close on time, that can create problems through the transactions. Some lenders might cost more, but they're going to really focus on your closing time.
Really, what should they be looking for in a lender?
You're going to want a lender that's, number one, available. you're going to want a lender that is experienced and can answer your questions. And if they can't answer them, get you an answer relatively quickly so that you can make a decision that you might need to make. I would say availability and communication are probably the top two things that you would want in a lender.
What's reasonable to expect from a lender in communication? Say it's a smooth transaction. Every box is checked, every T is crossed, every I is dotted.
Yeah.
It's flowing through it.
If it's a perfect no issue loan, like
Yeah.
we're going to talk on the initial upfront, you're going to be introduced to me.
Mhm.
Jenny's going to say, hey, call Rob. You're going to call Rob, and we're going to have a conversation about what you're looking to do. And then I'm going to steer you or direct you to do an application, whether you do that online or I take the information over the phone. You can come in person, whatever's
Most
best for
comfortable
you,
for you.
and most comfortable for you and your timing. And then once we have that information, we can run our pre-approval, get you out shopping, right? And then at the end of the day, you're out shopping with Jenny, and then you get under contract on something, and then I get back involved in the picture, and we structure the deal as if we set it up and move the file into underwriting. Typically at that time with my team, you'll get moved to our processor who will take great care of you and get us to the closing table. And I'm still continuing to do the upfront stuff with other borrowers as they come in, but you're in that processing phase now. We're in a loan that's moving forward and underwriting and processing, getting that closed, and then we show up at the table, we shake hands and kiss babies and give high fives and take pictures, and that's the smooth part of it. In a perfect world, you work with our processing department to get the loan actually closed. And obviously, if you got questions along the way, hey, your processor's asking for this, what is that? And I'll have to go to the processing department and say, hey, what's going on? And they'll let me know. But
does the processor communicate along the way as well?
Absolutely. So the processor, I'll be basically introducing you to, hey, this is Kelly Johnson. She's my processor. She's going to take good care of you, get you from A to B. Anything we need for the loan, you're going to work with her on getting. Please get her things timely and quickly, and we'll get to the closing table on time or hopefully sooner.
What's a reasonable expectation for getting fully funded? So if I wanted to buy, I'm ready. I'm looking, I'm ready. I've got Jenny as my agent, and now I've connected with you.
If there's some rules and regulations in place that us lenders have to abide by, so we can close a loan, sometimes as early as 7 to 10 days. Depending, as long as we meet everything, we've got all our appraisals and everything in order. Typically, though, that's not always the goal. That'd be a goal in the case of like, hey, I had a deal that fell through. Our closing times in 7 to 10 days. Can we get this done? And everybody does what they can do, but that's kind of the laws we have to abide by as lenders. We've got to give you so much time, and you have to have time to review documents, and there's some compliance issues that go into those types of scenarios. But we typically try to write a contract for 30 days just because that kind of gives everybody time to move out, do the processing.
Because there's a lot that's happening during that time, because most often there's an inspection period during that time. If there is a dwelling on it, then we're going to want a home inspection, right?
Potentially.
And we want to be able to allow time for that. And then once we go under contract, then financing, the lender goes to work for you, but also title goes to work for you. So we need to be able to give them time to be able to pull title. Now, speaking of dwellings on the land, USDA is pretty specific about what that looks like.
Single family residence, USDA would require to have on the property, and now start to do double wide mobile homes. They are coming back into the USDA fold, which makes sense. But previously, 12 years was kind of the limit, but now it's going to be 20 years old.
That's significant. That really opens up the opportunity.
2025, so 2005 or newer, that would be eligible today. Next year.
How many people are blown away that 20 years ago was 2005?
Yeah, right. A long time ago. I wasn't even doing this 20 years ago.
It also has to be on a foundation.
Yeah, permanent foundation for a mobile home. You have to have a structural inspection done, which is an additional cost to you, the borrower.
Do you know typically about what that runs?
$300 to $450 probably, depending on the location.
Depending on who it is, where it is, and how quickly you need it.
That's correct.
The sense of urgency oftentimes will escalate that price.
That's correct.
Any nuance, variable?
Acreage can come into play. We talked previously about if in this little sketch here. So you're not going to be able to farm the land with USDA back loans. So if there's a farm, if there's any signs of a farm like a silo or a livestock existence or a crop of any kind, and it appears to be a working farm, then they will probably shut that down.
What if it is a homestead? So I'm not farming for anybody else but my family.
That should be okay.
So like I might have 1 or 2 head of livestock. I might have some chickens. I have a garden, things like that. I'm not selling it commercially. I'm only providing it for my family.
That should be fine if you're only doing it for your family. What they're going to look at is your tax returns. USDA,
which is a Schedule F.
USDA is 100% financing for folks. So we're going to get your 2 years tax returns, and if on that tax return there's a Schedule F farming schedule that shows that you're commercializing or selling product that way, then they would probably deem that a working farm.
Yeah. And it's really a really low minimum.
Even if you're losing money.
so don't even think like you can skate by just selling it the road, a farm stand, because it's the minimum to be considered a commercial farming operation is $1,000. They're not looking to see, that you've made all of this money. They're looking to see if you made really a little bit of money.
Right.
And that's what's really important about working with professionals is they're going to know the questions to ask. They're going to know who to ask, and they're going to know where to go to look for that. And then there's also extra protection for you because of insurance that we carry and the things that we have to do to be able to stay in compliance, because if we're in compliance, then that means that you're in compliance.
Let's talk about a scenario. So you want to buy a home that's potentially USDA eligible, which is 100% financing, no money down, just pay your closing costs. And for whatever reason, we've started the process and something's come up and we can't close the loan with USDA. We have to flip and change it to FHA or conventional financing, where it's there now. We all of a sudden we have a down payment that's required. We've got a product at our company that we work through the state of Kentucky. Kentucky Housing will kick in $10,000 up to $10,000 for down payment assistance and closing costs. Company, we offer Kentucky Housing through the state. They'll give you $10,000 of down payment assistance and closing costs. So in any event that we have to make a move or pivot, and you're expecting to, not put any money down, well, now you know that this program's available, and we can make a shift and go to FHA or conventional financing and attach the $10,000. That's money you wouldn't have to come up with out of pocket. So it's like no money down out of pocket, but in the event that's something that we could do and look at as well. You can also piggyback that $10,000 on the closing costs. So if you're buying a home USDA, no money down, you're going to have closing costs. Say it's $5,000, $6,000, and you're like, hey, I don't have $5,000, $6,000. We can grab that Kentucky Housing money, the $5,000, $6,000 for your closing costs, and go from there.
So with Kentucky Housing, what kind of stipulations are on that? I mean, can that go with any kind of farming or agricultural, or does that too have to be single family residence? Single
family dwelling, single family housing. So people that would be living in a home as a primary residence, not just land. No, it would just housing. Just like
but they could still homestead.
Still homestead.
Because you're only providing for yourself, but we're talking about the zoning on it. So whenever a property is listed, it has to declare what's the zoning on it, whether it's single family residence, whether it's zoned agriculture. Whenever you have any questions, whether a property is USDA eligible, don't hesitate to reach out to me, and I can help get you connected to that USDA map as well, and be able to answer any of your questions, and to be able to connect you to Rob to be able to handle that transaction.
Thank you.
So I really appreciate your time today and your expertise. And
my pleasure. Thank you for having me. Good seeing you.
I look forward to connecting you to Rob. Thanks, everyone. Bye-bye.
Bye-bye.